arrival. Then we'll do the introduction of our speaker for 5 minutes. Then at 6:10, we'll start the discussions. Then at 6:40, we'll have our Q&A session. Then we'll use the last 5 minutes for closing remark. So ideally, our presentation should end by 6:50. So before we go into the presentation, we normally start with some of the finance gems. As part of our tips for this month, I share something on a reconciled bank account makes a reconciled mind. And I guess you all agree with me that once you have your account reconciled, it frees your mind from any thinking or any worrying about what's happening to my account. Then also receiving bank statements or notifications indicates that you need to do a bank reconciliations. Periodically, we get our bank statement, and for every transaction, we get notification. So that gives you an indication that you should be doing a reconciliation. So prior to this meeting, I did a poll on LinkedIn to get to know how many people do bank reconciliation, or if you had done bank reconciliation. And clearly you could see here that a lot of people haven't done bank reconciliation before. So hence the reason for this practical sessions. So for our speaker for today, we have Jeff Apiano. He works as a relationship manager with GCB Bank, head office, with the energy, oil and gas units. He has a 3-year work experience with Deloitte Ghana and 12 years banking experience. He has been involved in several high-value transactions in the energy, oil, and gas sector. Jeff has an MBA in finance. So, Jeff.
Hello, Jemima.
You're welcome, and thanks for honoring our invitation.
Thank you very much. I'm honored. Okay. So, good evening to everyone, and thank you so much for making time to join us for this presentation on bank statements. I hope you can all hear me.
Yes, Jeff, I can.
Fantastic. So let me just start with a small joke, like I do sometimes before we go. They say that if you have a secret, don't tell the bank because they have a lot of tellers. If you tell the bank, the tellers will tell everybody. And then they also say that only accountants can save the world, though. This world that we are in, only the accountants can save the world. We can do that through peace, goodwill, and reconciliation. So please, today, let's reconcile ourselves and save the world. Anyway, that's just by the way. So I'm grateful for the opportunity for Finance Gem. Finance Gem is doing a great job, and we really appreciate the regular interactions and what we get on the finance world. So today, it's about bank reconciliation. Bank reconciliation, the name may sound boring. You are just wondering, what is this bank reconciliation? You see, already I know that maths is a subject a lot of people don't really like in the first place. So anything that has to do with the figures, I know people even want to run away from it. But the thing is that maths is very, very important. And so it's your banking, recording, and bank reconciliation, because these are the small things that if you get to know it will save you and take you away from all kinds of troubles, you know, and it will also help you not to be a victim of fraud, because in this modern world, this automated world we are moving towards, fraud is moving into different aspects, and it's also now very soon to be moving highly in the automated section. So it's always important that you do the bank reconciliation. And thank you, Jemima, for the poll you have done to help guide our presentation today. So now the question, or the first thing you want to know is, what is a bank reconciliation? So when we say bank reconciliation, what you are trying to do is you want to reconcile your bank statement and compare it with your bookkeeping records for a period, in order to be able to pinpoint, every discrepancy that you might, come across. So when you've made your records and you know that everything is intact, you can properly go through and then identify exactly what should be and what should not be in your records. Because at the end of the day, what we are talking about money, you know. So at the end of the day, money is the most important factor. So bank reconciliations are something that we should not joke with at all, whether as an individual or as a company. Now, when we say bank reconciliation, what exactly are we looking at? So when we say bank reconciliation, we are looking at your business's checkbook or your individual checkbook. So you yourself, whatever checkbook you might have, you want to do a comparison of that checkbook. You want to compare your cash ledger accounts and your bank statement. You want to see if you identify any differences in any of them. You want to look at the items that have been recorded or deposited on your bank statement that are not reflecting in the cash account, but it should be. So maybe some charges or something that are appearing in your bank accounts, or some things that you are expected to be in there that should be there, that may not be reflecting. Then you're also looking at items that have been deducted from the cash account that haven't been deducted from the bank. So you know that you have taken some monies from your business, but you are still seeing that in your bank account. And then we're also saying that we are basically putting everything where it should be. So basically, what you are doing is that you are taking everything and placing them exactly where they should be. So it's balancing. You want to make sure that A is equal to A, because when you are doing reconciliation, what you're trying to do is that what is in your cash book or what is in your bank, your cash statement, your cash ledger account, is it equal to what is in your bank account? So if you're having 1 million there, it should be 1 million there. So if something is going wrong, they are just doing a reshuffle to make sure that everything should be where it is. I want you to note, however, that even in accounting, you can also reconcile wrongly. You can assume that I picked my bank statement as 1,000. I picked my cash ledger or my records, it's also 1,000, so I'm balanced. So I'm okay. You'll be surprised that you'll be balanced, but you're not balanced. And we will realize this along the line. So let's remember that bank reconciliation starts with proper bookkeeping. So if you are not keeping records, then you know that you're going to have serious challenges with your bank reconciliation. So it's how a proper bookkeeping. And let's also note that modern technology and let's say modern systems has actually helped bank reconciliation lately. So maybe the bank reconciliation may not end up being the way some of you may know it. Of late, modernity has actually brought about an improvement in the way we go about bank reconciliation statements. So I think as we go along, we would see all those things. We'll come up and discuss all those items. Now, the next thing is, who is responsible for bank statements? Who is responsible for bank statements? So if you are doing your own bookkeeping, then of course you are responsible for reconciling your own bank accounts. Otherwise, if you've hired someone to do it, then a person, if you have a company and you've hired someone, then that person is responsible for doing the reconciliation. So you need only to reconcile your bank statements if you use, you only need to reconcile your bank statements if you use the accrual method. On the other hand, if you use basic cash accounting, and all you need to do is just to record every transaction at one point in time, and just that one is not as pay as you go. But if you know that you are keeping your records in a certain way, in an accrual way, then you need bank reconciliation statements. But even for me, even if you do cash accounting, you still need to do a bank reconciliation, because like I said, you may think you are reconciling, but there may be issues in what you are doing, or in what reconciliation you are doing, because at the end of the day, discrepancies will always occur, and the objective is to discover any discrepancy and make sure that everything is leveled. It is cash we are talking about. Of course, if you are not sure of which accounting method we are using, I'm sure that along the line we will be able to explain. So, like I said, big companies will hire accountants or hire some very serious softwares to go about doing their bank reconciliation for them. But at the end of the day, everyone should try to reconcile their books. Now, the next point I want us to talk about are 5 compelling reasons why we should reconcile our bank accounts. So why should we do bank reconciliations? So bank reconciliations may be tedious, but the financial hygiene will pay off. So here's why it's great. It's a great idea to do them. So first of all, you want to see your business as it really is. Secondly, you want to track cash flow. And thirdly, you want to detect fraud. Fourthly, you want to detect bank errors. Then the last one is to stay on top of your accounts receivable. So let me just take them one after the other to see your business as it really is. Now, sometimes you may think that, oh yes, yes, it is. I mean, you pick your accounts here. A is there, B is there, everything is looking okay, but it may not really be the case. You might be deceiving yourself. In fact, recently, we've had a customer who was actually receiving wrong credits into his accounts. You know, he should have been. I mean, he runs a business and he expects some people to be paying monies into his accounts, but somehow he has been receiving some other monies into his account. But he, being a businessman, assumes that those monies are also part of his business monies, and then so he works on that, and then before he realizes he's spending someone else's money. So if he's going to measure himself on the kind of money or the amount in his bank accounts, then he knows that then he's not giving himself the right impression, because even he might even print out the statement and use it for a transaction, only to realize that what is in the account is not correct. So if such a person is not doing bank reconciliations, then you'll be given the wrong impression for business. You may think you are doing well, when in fact you are not doing well at all. So you want to see how your business really is doing, so that you know how to measure yourself for the future. Then secondly, you want to track your cash flow. You want to track your cash flow. So you want to know exactly where your money is going. You are doing business, or you are being paid your salary, and you are not reconciling, and then you will not know exactly, you know, how money is being spent. For instance, my wife, I think some years ago, I used to complain. I've been complaining to her to always reconcile her bank accounts. Me myself, somehow I do reconciliation every day. I do not know if it's because I'm an accountant or because I am very petty in a way. But as for me, every single day I do bank reconciliations, because for me, even a point is very important, because there are some times that you are doing a transaction and just 50 pesos is just preventing you from completing the transaction. So if you know that in the past, I'm sure most of us would have heard these stories about somebody who sitting somewhere in some bank somewhere and is processing salaries for, let's say, 1,000 or 2,000 or 5,000 workers, and then the person will just take 50 pesos out of each person's account for himself. So 50 pesos, 50 pesos, 50 pesos. I'm telling you that single person can do a lot. When you go to the mall, they will sell things at some pesos. Just imagine you are making a payment and you are short of 20 pesos. How embarrassing it will look like. So you want to track your cash flow and make sure. So, like the example of my wife, she was spending a lot on data, on credit and all that. And I used to tell her that, hey, you are spending too much of your monies on credits. And she didn't believe me. So one day I forced her. I mean, at the point she realized that she was always short on cash. So she tried to do a reconciliation and realized that, hey, she's spending 40% of her salary on credits, on data, on calls. And that day, since that day, about 4 or 5 years ago, she decided to manage her use of data. So I think that's the day she even started doing this thing called Mashup, to make sure that she's tracking every second. 40% of her salary, and she earns quite a lot. So to be spending so much, then you are really wasting money. And right now, since then, she's been able to raise money. And she's now doing she's doing good business, because she just, you know, took notice of her bank transactions and decided to always reconcile her bank statements. Then you also want to detect fraud. You want to detect fraud. I mean, sometimes you are doing business and things can happen in so many ways. You might even be in a partnership, and if you're not checking what the others are doing, maybe what your partner is doing, or what maybe your subordinates are doing, before you realize, money will just be going out of hand. You just be losing money without even knowing. In fact, the fraud cry is not even always even on the business side. It can even be on the bank side. Now, of late, we are doing, there's a lot of mobile money going on around. Me personally, when mobile money came, I never subscribed to it personally because I was a banker and I felt that it wasn't ethical that the mobile guys are moving the monies. I mean, they are moving to a space which is for the bank. I felt that is a reserve for the banks and you find them there. So I never subscribed to this mobile money stuff until recently when my bank also brought about their own mobile wallet. So I just have just one wallet, which is my G Money wallet from GCB Bank. But basically these mobile money issues can be a problem, and we know we see the fraud happening every single day. So with all this fraud going on, and you don't take time to do reconciliations, then before you realize your monies will just get missing. And I'm sure most people who don't do reconciliations are the ones who also report about monies getting missing from their from their bank accounts or from their accounts. So you want to detect fraud and make sure that nobody is taking money which is not yes. If you're probably do your reconciliation on time, it will help you, save your trouble with probably your business partner or your employees. So if somebody is stealing from there's an issue somewhere, you want to make sure you detect it quickly before it escalates into a different level altogether. So bank conciliations even helps to save relationships because you see it early and you resolve it very quickly at the early stages. You also want to detect bank errors. I think I said it earlier. The banks make mistakes sometimes. It could be positive or negative. Sometimes they can put money in your account which is not for you. The bank can give you interest. So let's say it's people that accounts that there are some accounts that do not earn interest, but sometimes through system errors you see people receiving interest income into their accounts, which are errors. Sometimes you also see some wrong deductions on your account, which should not be. So you also want to make all those detections. And then you also want to stay on top of your accounts receivable. Like my dear customer who was not reconciling his accounts, he was receiving someone's money into his accounts, thinking that his customers were paying him. One day, the real owners of the money came around, and our customer is looking so miserable. Because honestly, when you check, you realize that that he's a businessman and he expects to receive such kinds of money. So he goes and he sees his balance and he thinks that okay, they are paying, but he wasn't reconciling. And before he realized, he's having very, very serious issues because he's now spent someone's money and he has to refund it. So you want to be sure that yes, people who are paying you are actually making the payments. You want to make sure that your monies are intact. If you realize that a check you're expecting never came, your bank reconciliation will do that for you. So if he had looked inside, he would have seen that yes, he was receiving monies, but not from the right source. So bank reconciliations, they are just like a feel safe for making sure that it's a form of it's a kind of control for your accounting system. And even though I'm saying accounting system and all that, I'm applying both to individuals and to companies and to businesses as well. This bank reconciliation thing is not just for business. Everyone should do it. And I also said earlier that the bank can you can wrongly balance your accounts. Like I said earlier, you can wrongly balance your accounts, and of course, it could also be that the issue could be positive or negative. It's either the bank is giving you money or they're actually taking away monies from your accounts. Now, one thing that you should note when you are doing your bank reconciliations are the narrations on your bank accounts. And not just your bank accounts, but narrations also on your records in your ledger balance, ledger accounts. Narrations are very, very important because the lack of proper narrations has caused people serious issues. Very, very, very big problems. I've had some customers who have complained and they've seen some transactions and they did not understand the narrations. I have some customers, they receive over 3,000 transactions in their accounts a single day. Such a customer is very painful to even help do reconciliation for them. Because if you need to identify an error, you have to go through so many transactions in just one single day. And so just imagine that the narrations are just bad. These narrations would, how do you call it, would affect how to effectively go about their reconciliation. So when you are doing reconciliation, bank reconciliations, the narrations are very, very important. Make sure that what you are seeing in the bank statements and also on your records are something that you can understand. You know, luckily for us of late, there are some bank systems or some of the banks that have helped to do reconciliation. So there are some banks that have adopted systems. You know, some have brought about some coded platforms that actually helps bulk reconciliation. And so, luckily, if you are a business and you have such a bank, then maybe at least up to that level they can assist you with such bank reconciliations. You know, even some customers can also even do prepayment into your account. You can have a customer and he's paying the money into your account even before he's telling you that he's buying something from you. Or somebody can put in money into your account before they even inform you that, yes, I put money for this and so purpose. So you want to make sure that you're reconciling your accounts at all times to keep that balance for yourself. Now, you should realize and understand that your bank account balance is your money. Don't feel shy to approach the bank to demand, you know, statements or to demand things on your account. There are a lot of people who, when it comes to going to the bank to ask for something concerning their accounts, they can be very timid. Because some bankers can actually intimidate you. But you have to know, any bank account balance, it's equal to your money. And any bank account balance is a liability to the bank. So the more you put money in the bank, you are increasing your money, but you're also increasing the liability of the bank. So the more money you put in your accounts, the bank's liability is going up. And of course, vice versa. If you reduce, the liability comes down. So for you, your bank account balance is an asset. To the bank, it's a liability. So if you fail to do bank reconciliation, so let's say proper bank reconciliation, you might end up getting your money being some, because see, for the bank, you, like I said, the balance, your account balance is a liability to them. So if there are some monies coming out of your account and you are not seeing them, eventually to enter into an individual's pocket. You know, it will enter in someone's pocket. So if you are not tracking your money, the money will end up, it will be someone else's asset. Your account is your asset. So don't feel shy to go to the bank and to demand, how do you call it, your bank balances. Now, let's just go to what's on the slide right now. Talk quickly about what you do when you are doing your bank reconciliation. So when you're doing your bank reconciliation, you are balancing both your bank accounts and your ledger balances. So now let's pick the bank accounts. So when you are doing your reconciliation, you start with, you have your bank statements, you collect your bank statements, and then you know what balance there is on the bank statements. Now, what you want to do is you want to look at your deposits in transit. So you may have, maybe at the close of the day, you may have sent someone to the bank to put money in your account. You may be balancing your books at the end of the month. So maybe on the 31st, let's say this Tuesday is the last day of the month. So you might have sent monies for them to deposit the monies at the bank. And so you record your book that, yes, this money has gone to the bank. Then you might get to the bank, and then the bank, the bank may have closed. And so you will not get that money into your account. Maybe the bankers can say, okay, give it to me the following day, I'll process it for you. Sorry. The following day, I'll process it for you. Or it could even be that it's a check that you have placed into your accounts. Okay, I'll come to the check later, but we have deposits in transit. So these are monies that you have sent, you have actually recorded in your books that they are going to hit your accounts, but they are not, it didn't get there on that particular day. So in your books, so you know you had 1 million and then you sent 200,000 to be deposited. So your ledger is supposed to be 1.2 million, but the money doesn't get credited on that day. So when you are doing your reconciliation, you need to add back. So it could be that it ended up in the account the following day, yes. So you know that, yes, when you're doing bank reconciliation, you also look at, you know, you can pick the following day's statements, okay, statements after the period, and do adjustments. So that is one thing you should look at. Then so that's one thing you should add up to your bank account balance to make it equal with your ledger balance. Then you should look at your outstanding checks. So you have given checks out to friends or customers or to anyone. The people, those people haven't cashed the checks yet. So those checks are outstanding. In your books, you know that, how they call it, you have paid those checks. But when your bank statements came, people haven't gone to pick up those checks, haven't gone to withdraw. So you may be stating a higher balance, maybe stating a higher balance than it should be. So those ones too are, how do you call it, things that you should look up, and then also help to adjust your do your reconciliation. And then you can have errors. So the errors can be plus or minus. Yes, if the bank paid money wrongly into your account, it's an error. So you need to adjust. You know, if they paid the money wrongly to your account, of course, you should take it out because it's not yours. Or if they deducted monies wrongly from your accounts, of course, it's an error. They should take it out. So it could be anything. It could be someone's money that's probably ended up in your account. It could be a duplication, a system duplication. It could be anything. So, I mean, bankers, we are not perfect. So, of course, the systems can sometimes make mistakes. So you adjust the errors plus or minus. And then when you finish, you will get your adjusted balance. Then you pick your book ledger balance, your ledger accounts, and then you also do your reconciliation. You pick your cash balance, you add collections and interest. Sometimes you have, how do you call it? I mean, you are having a savings account, but you cannot tell how much money you receive as interest at the end of the month. That one is difficult for you to tell. So when you are doing your cash book adjustments, you are closing your books, you can't put anything there because you can't tell how much you are receiving. So those interest and those other collections, you have to wait for the month to end for you to get a bank statement before you can tell that, okay, these are monies that have hit the account. And so you adjust them with your cash book. So then you go and record your cash book. This is how much I received as interest at the end of the month. So those are things that you look out for when you are adjusting your book ledger balance or ledger accounts. Then you look at bounce checks. In fact, we have on the slide into brackets NSF, which stands for insufficient funds, or Jimmy, what's the NSF again? Can you imagine? I forgot it, but NSF basically means not sufficient funds, you know. So not sufficient funds could be for so many reasons. So you wrote a check and the person didn't probably take the money on time. You see, one thing that can cause insufficient, non-sufficient or bounce checks is that if you don't do your bank reconciliation and you have given out a check to somebody and the person hasn't taken the check, and you assume that the person has taken the check, and you spend whatever balance on your account, the day the person presents the check, that check will bounce. So checks can bounce for so many reasons. The main reason is that you didn't have money, but other reasons could be because maybe there was a problem with the mandate, maybe with the dates. There could be something on the check, or there could be a reason. Sometimes even the banks have problems. The bank systems can fail them, and so a check will get bounced or a check will get returned. So yes, you should look out for bounce checks. You feel like, oh yes, you had money, I've given out the checks, and so you expect it to go through, but this is the issue that can come up. Then we also have errors that can also appear, and so you need to do your adjustments like that to make sure that you have balanced. So these are the things you go about. So you adjust your cash accounts, and then you compare balances. So at the end of the day, what you are looking for in a bank reconciliation is that the balance in your bank account is equal to the balance in your accounts ledger, your bank ledger accounts. So what is in your books is equal. A is equal to B. That is basically what you are seeking to achieve. Now, Jimmy, can we display the next slide for me, please? No, the next slide. Okay, so this is just a short template, of later, and because of modernity and technology. In fact, there are so many ways you can get templates for doing your bank reconciliation. So bank reconciliation, you can just go on the net, get any Excel or any template, and then it will help you to do your bank reconciliation. big companies even use softwares and other things to do bank reconciliations of late. But what we have on the screen right now is just a basic sheet that anyone can use in doing their bank reconciliation. So basically, you start with the bank balances. You are adding your incomes and then taking away withdrawals, or adding deposits, taking away withdrawals to get come into equilibrium to what is in your book. So you have something like this. You put your bank balance there. You add unpresented checks, add other credits that relate into the bank, and then you take away deposits in transit, take away these other checks, take away other charges and all that. And then, of course, you end up having to balance your accounts. Okay, now how often should you reconcile your bank account? Ideally, what you should do is that you should reconcile your accounts each time you receive your bank statements. So immediately you receive your bank statement, quickly you reconcile. Me, I reconcile every day because maybe I am prepared, or maybe I'm concerned about how much is hitting my account. So every day, I'll balance my accounts. But you can do it monthly or weekly, maybe as an individual. Most of you will probably receive your salaries at the end of the month. So maybe when you receive your salaries at the end of the month, then you probably ask for your bank statement and you balance, because you start spending when you receive salary. So maybe you want to do that on a monthly basis. There are some companies who even receive their salaries twice in a month. I know some companies that have recently adopted that, because the system is hard. Now they decide to split your salary and give it to you, bi-weekly. So some people are receiving their salaries twice a month. So someone like that, you can also decide to do a weekly or bi-weekly, how do you call it, reconciliation of your accounts. Or also, if you are a big company, you think that you want to wait till the end of the month, you can also wait till the end of the month. I have some companies like the one I said about, that I talked about, that has a lot of transactions hitting the account every day. Such a company, they cannot afford to do reconciliation on a weekly basis. The reconciliation has to be every single day. In fact, recently I had an issue about a customer who had a big problem in the office because the one on the schedule who is supposed to do a reconciliation could not do it weekly. In fact, this particular case, I think, was a bit complicated. It was involving a pregnant lady who was supposed to be on the schedule. She was trying to do the reconciliation. She got some pregnancy-related complications, and so she missed some days or some weeks, if I should put it. She couldn't come to the office for some weeks. And just those few weeks that she couldn't come in, the level of unreconciled items that occurred and the problems it gave the company, I'm sure it wasn't for her conditioner, should have been in very, very, very big trouble. So I mean, depending on how your business is like, that's what's going to determine how you go about your bank reconciliations. Now, before the reconciliation process, the business should ensure that they have recorded all transactions. So like I said at the beginning, proper bank reconciliation starts with proper bookkeeping. Of course, of late, luckily for us, we have online services. So you don't even have to wait for the end of the month to even get your bank statement. There are a lot of platforms to get your bank statement. So you can pick your bank statement as a business, as an individual. Once in a while, just pick it up and look through, because you will never know what is going on through your how do you call it, your accounts. You never know what errors are happening. Quickly, I received some questions before this session, so I just want to quickly address them before we continue. Someone said that they wanted to know more about modern banking practices and the effect on bank reconciliation. Yes. So a lot of bank softwares are up now, and like I said, you can pick your bank reconciliations every day. Now, myself, for instance, I have a habit of not deleting my alerts, because you see, if you are doing bank reconciliation, assuming you fail to properly record your transactions, at least your alerts can help you. So assuming even if you are not even getting your statement on time, your bank alerts can actually help you. You may have forgotten something that went on. So maybe you are probably sending money to someone. Sometimes the money can duplicate. So you had 1,000 in your account, you are sending 100 to 50, and then you sent the 100, you are there, you get an alert, your balance is 900, then you get another alert, your balance is 800. Quickly, it prompts you that there's an issue over there. Even if you don't even see that, the later on when you see it, you realize that, oh yes, on this particular day, this transaction duplicated. Because sometimes the duplication actually happen on your blind side. You know, especially most of us that are now using automated means, you will do something, it appeared failed, apparently it's successful, you do it again. So you don't joke with your alerts. If you don't have alerts, it's important that you get alerts on your accounts. You know, then somebody also wanted to, okay, before I continue, let me also add, somebody also wanted to know how they call it, how the modern banking is benefiting business, actually can also cut costs on these automated ways of banking. Now, most banks, or I know all banks, allows you to link your wallets to your bank accounts. It allows you to link your wallets to your bank account. So myself, I get money on my wallet. I know that if I transact on my wallet, I'll have to pay. But if I transact on my account, it is free. Because for wallets, you are sending money, you are paying. You are drawing money, you are paying. So Angie is sending me money. Angie will incur costs. Me too, that I've received the money, I'm going to withdraw. I incur costs. What I do is I receive my money, I push it straight into my bank account, because how do you call it? Wallets to bank. You are transferring monies from your wallet into your bank. It's free. I don't see any bank charging, because to the bank it's a form of deposit. So there are so many ways you can go about your automated business nowadays. You receive money, you don't want to pay, you move the money into your wallet, into your bank account. I probably withdraw from ATM free of charge without incurring any cost. If you have to pay somebody 2,000, 3,000, you just move the money into your wallet, into your bank account from your wallet. You withdraw it, you pay the person, no cost incurred. You know, of course, we know that the mobile banking is giving us convenience, but it's also very, very expensive. And so these are things that you want to note to control your costs when it comes to your banking transactions. At first, you'll pick your bank statements, you'll see like 5, 6, 7 transactions. But of late, because of this automated ways of doing business, normal individuals are having like 100 transactions on your account. You'll pick airtime upload, this so you can see a lot. So if you're not careful, before you realize, if you're not reconciling, the things that even didn't go through, you'll not even be able to identify them. Sometimes you can even buy credit, probably 100 cedis, maybe basically 10. It's possible that you even receive just 50 cedis of value on your credit, and maybe the other charges did not even go through. You know, and if you are not careful, you will forget, and you assume that you actually received those credits, especially because of course you are supposed to receive an alert for every money that hits your account. So if you're even buying credit and you don't get alerts, that's why you shouldn't be deleting your alerts. You know, it's important you don't delete your alerts. So all these things are modern banking, situations that you should be looking out for, so as to control your cost and to ensure that you are not losing money. Remember that bank reconciliation is to help you save your money. And then errors from the bank, what are the repercussions on reconciliation? Yes, of course, we spoke about it, that errors on the banks can cause problems. Then somebody says call deposits and their effects on customers' accounts. Yes, I always advise my customers, my corporate customers, to always keep a call account, so that, of course, there are some accounts that would receive charges. Normally, you can just maintain 2 types of accounts: a current account and a savings account. For savings accounts usually do not attract charges. Current accounts would attract one charge or the other, some way, somehow. Current accounts would attract charges. So if you're a business and you have a current account, you can have a call account, so that the interest you earn on the call, at least will take care of the charges that you might incur, or at least even reduce the charges you might incur. So having a call account is very, very good for business. It helps you to be able to control your costs on your finances. Somebody's asking what's the benefit of having more than one account. So initially I would say yes, it is always good to have 2 types of accounts: a current account and a current account and a savings account. because sometimes you may have to write out checks to people to go and cash. So it is good that you have a current account. But you see, with the way banking is going nowadays, and with the way there are plans to make the system cash light, it will not be relevant to have more than one account, because it's just going to be a cost. I mean, one person cannot have two savings accounts. You can only have one savings account. So a time will come, nobody will really need a current account. And of course, if you have several accounts too, even reconciling becomes a problem. I remember we had a customer who had 281 accounts, current accounts, running very active accounts, 281. And reconciliation for that customer and myself was a problem, was hell. So somehow we had to, employ technology and some other ways. And now we have reduced the accounts from 281 to 10 accounts to help aid reconciliation. So the reduction in the accounts has actually helped a lot, So I'll just end here quickly, and then if there are any questions about bank reconciliation, please you can feel free to ask. I may have missed the point, but if I missed something, someone can add. But if there are any questions you want answered, I could quickly give an answer. So thank you very much.
Thanks, Jeff. Very elaborate, and good that you added the Q&A session as well. Please, if there are any other questions aside what we had received, you could drop it in the chat box. Okay, so Jeff, I have another question that just came through. The person operates her business with a Momo account. That's the only form of account that she has for her business. Can she also go with the principle of bank reconciliation to also reconcile her Momo account?
Yeah. So with the Momo account, yes, she could, pick the statements from the telco and do reconciliation, but it's cumbersome and it's difficult. You see, some of these telcos they even limit. Sometimes you want to call for the statements and they say, oh, you can only get the statements in the last 2 months, in the last 1 month, in the last 3 months. It limits you. For me, it's not advisable, because personally, when Momo started, I said that space is the preserve of banks. And you're having these telcos going in there, charging people left and right, 10%. No. For me, my bank GCB Bank has done G-Money, and they were forcing us that if you don't do G-Money, otherwise there's no way I would have a wallet. You should always have a bank account. And it's good you said she's a business. Look, any business, any serious business would require a bank statement. You'll not go anywhere and then you say you want to do business and then bring your financials and they will collect your Momo account. Don't do that. So I would advise her to open a bank account and link her wallet to the account, so that whatever money she gets on the wallet, she can easily push into the account, and that will aid in her reconciliation. Having a Momo alone, in fact, I can't speak for the telcos. I don't know how they go about it. Yes, I know. I think that some of the telcos can give you statements. Of course, G-Money, we can give you statements, but the process is a bit cumbersome. And you also know how Momo also does narration sometimes. Sometimes the narrations or the information or Momo statements are not enough. So for me, I advise get a bank account in addition to your Momo wallet and operate them together.
Thanks, Jeff. We have Isaac Wama. Your hand is up. Hello, Isaac. If you could ask your question. I guess we lost him. Jeff, I guess we lost him. Yeah. Okay. So let's quickly wrap up our presentation. So in conclusion, what we can say is bank reconciliation can be done daily, weekly, or monthly, depending on your volumes of transactions. So what will work for this individual might be different from what will work for you. What will work for someone's business will be different from what will work for you. Just assess your situation and pick which pattern you want to choose. Thank you very much.
We've come to an end. Quickly, if you don't mind, let me quickly add something to as well. Okay, so right now, like we are moving very soon to a cash light society where fiscal cash itself will not be in circulation in the system. You know, even if I'm sure a lot of people have heard recently, the police are refusing to escort bankers and their bullion vans to pick money because of this risk involved. So banks were, I think the IGP asked that banks should acquire the right bullion vans, the correct strong bullion vans to go about this cash business. And these vans are very expensive. Me, I don't see banks investing in that. What banks would rather do is to invest in a cash light system, in a system that allows less cash to be in a system. So now very soon we're moving towards automated cash systems where fiscal cash becomes very scarce in the system. So as we move there, yes, that's where the crime will also move. You know, already NTMO and then the other networks, we are seeing the kind of crimes you know, occurring or happening every now and then, and how they're always finding ways to avoid them. So now the crime is going to move from people actually accosting you for fiscal cash to people actually stealing your money, you know, or virtually. So if you are not, you know, taking time to go reconcile your accounts, check your statements every day, then you will be in danger. We should take this bank reconciliation very, very serious, because a time will come that the crime is going to be different. Okay, so that's what I just want to add. So let's all get ready for a cash light society in this country. I think I saw someone's hand there. Jimmy.
Desmond. Desmond. Desmond, if you are speaking, we can't hear you.
Yeah, can you hear me?
Yes.
Yes, we can.
Oh, okay. Good evening to everyone. In fact, I've enjoyed the conversation today, and I want to actually commend the one who actually presented, Jeff. In fact, it's been so detailed. I'm coming from the banking point of view. In fact, everybody needs to do the reconciliation, because as a supervisor at the back office, I know what exactly happened. Reconciliation is done, I don't know, you can say seconds or microseconds, because a lot of transactions, you know, happen, and you have to, you know, balance before you leave the office. You understand? And sometimes those errors too, they happen. And in fact, for individuals, businesses, you need to take reconciliation very seriously. Otherwise, sometimes before you even retrieve those monies, in fact, it takes time, especially when there is this misposting and then the rest. Because individuals involved, sometimes, let's assume that your 15,000 Ghana cedi had been, you know, misposted into a non-performing account. Somebody who is, I mean, having a hardcore account on a loan, is not operating, as an overdraft. Immediately it drops in, the account swallows it. Meanwhile, you need the money the next day or something to do something. You have to report, and then the processes to get those money. Trust me, the frustration is too much.
Oh, have you lost that small?
Hello? Hello?
Hello, you're listening?
Yes, so reconciliation, let us take it very seriously.
Hello, that's
because so many things. Hello? Hello?
Jimmy, can you hear us?
Hello?
I think
Hello?
this is what we can hear, but I think Jemima cannot hear you.
Okay. Yeah,
But
so
you
all
can,
that I'm saying is that let's take reconciliation very, very serious, so that at least we know that, I mean, we will achieve our target of knowing our financial status at each time. Yes. Thank you. Thank you.
All right. Thank you.
Yeah.
I think Uncle Perry also raised his hand there.
Yeah.
Uncle Perry. Jemima, are you there?
Sorry, Jemima has lost her connection. So
I think we'll take unmute. Someone has to unmute Uncle Perry for him, because he's talking about we cannot hear him.
I think I can only mute him. So So maybe we wait for
Hello,
a few
Uncle Perry, can
seconds.
you hear us? You are mute.
Hello. Hello.
Uncle Perry, yeah, we can hear you now.
Hello?
Yeah, we can hear you now.
Okay. 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 All right. So I call myself lucky to have come on this program because a few mistakes I've made in life in the past, which I still do. It's not as if I've stopped. It's not to be mindful of my account in terms of checking my statement and reconciling the account. From what my brother has, the impact he has given us now into these things, I think that I can't wait. Tomorrow, first thing, I'll probably be the first person to try and get my statements put together and try and reconcile my account. But the question I want to ask is that, Jeff, you and your team, does the bank make mistakes? My question, please listen to it carefully. Does the bank make mistakes, especially with the systems that they claim they put in place? Because some of the charges, they claim that it is a system-generated one. So the systems are the one running the whole show. So I don't want to say that the system does the bank make mistakes, especially with the systems that they have or they claim that is in place. Can there be a mistake? Because I want to know. Then we can go to bed and sleep, or we can, also be policing the system, for that matter, policing the bank. That's what I want to know. Thank you.
Fantastic question, Uncle Perry. The bank actually does make mistakes. Let me pick it from when Desmond, said. So somebody has a facility on his account. He needs to be paying some money. The bank can sometimes make a mistake of crediting people's accounts. Sometimes interest, instead of interest expense, they end up being interest income. So I'm supposed to deduct, then they actually end up putting money in your account. It happens. After technology there, it's never perfect. Now, if you mistakenly give someone money, interest, which doesn't belong to them, which sometimes can be a system error, next time you are trying to reverse the money, if the person quickly spends the money, when you go, the account will have to go into negative. So the bank, yes, does makes mistakes. That one I have to admit. The system makes mistakes sometimes. Sometimes it's caused by overload and other things. I mean, those things are quite technical. I'm not a technical person on that aspect, so I wouldn't want to delve much into it. But the bank actually does make mistakes. Sometimes somebody is trying to, some IT person is trying to run something, and then maybe he will mistakenly go and press something. End of month, they have to do some, reconciliations, or they have to do some, how do you call it? Something. They have to do something on their accounts at the end of the month. When the month ends, to make some reporting, and someone can quickly, or sometimes even when you're having a change in system, when you're changing a system from one system to the other, or you're doing an upgrade, sometimes if you make a mistake with just one instruction, it will affect everything, and before you realize there is a mistake. So yes, it is automated, but sometimes there are some human interventions when it comes to some of the things that we do. Not human as in we key in it, but sometimes maybe a wrong instruction can sometimes bring about a mistake. So yes, the bank makes mistakes, and so they have to look at it. And if you are also checking your accounts, you will see, and you can quickly prompt them. Sometimes you also receive the money into your account. It's not yours. You quickly prompt the bank before you spend money which is not yours. Because if you spend money which is not yours, it's a crime. Just as giving out a check which will bounce. That's one.
Desmond, if you are talking, we can't hear you. Please, while Desmond is getting prepared, if you could put on our cameras, we want to take a group picture for today's meeting. If you could please put on your camera, we want to take a group picture. Okay, Desmond, you can come in whilst we also take the group picture. I know the discussions can continue on and on, but we are limited with time. So Desmond's question will be the last. If you have any other question, you could send it to me, we will address it and reply you. Okay. This one. Okay. So let's get ready for the pose. And once you are done, you let me know, eh? Okay.
Yeah, I'm thinking about them, so should be fine.
Oh, okay, okay. Thank you all very much for giving me some of your Sunday time. Jeff, thank you very much for the presentation that you had done today. We are very confident now with our bank, and we know that with a reconciled bank statement, we know that we can have our peace of mind. Thank you all for joining. Just as a reminder, for next month, or our next topic will be on inventory management. We'll start with the usual tips. Then at the end of the month, we'll bring an expert in inventory management. We know that we all run businesses in one way or the other. How are we supposed to manage our stocks? Let's start now. No matter how small the business is, let's start now, so that when our business grows and goes international, we have the standards in place. So do watch out for our inventory month, which will start in September. Thank you all for joining, and enjoy the rest of the evening.
Thank you.
Thank you.
Thank you.
Bye.
Thank you so much. Bye-bye. Thanks so much.
And you let me know when the recording stops.
I'm going to stop recording now.
Yes, yes, please do.